Why is this important? Think about this. Every check that you write in your business is not actually an expense. And if you don't have a real strong accounting background, like educational accounting background, a lot of times business owners don't realize this, right? So you need that controller there to help make sure that everything is put in the correct place so that you get reliable information out of your financials.
Hi, I'm Bette Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance related news. Come learn how to grow and keep your wealth.
Hi, I'm Bette Hochberger, CPA, CGMA, and in this video, we're going to talk about fractional controllers. So first, what is a controller? A controller is an accountant at a high level in a business. So we're not talking about your run-of-the-mill bookkeeper or someone who just kind of knows how to put checks and things into QuickBooks. This is a management level person who has years of experience working in accounting for small businesses or even bigger businesses, right? So think of your controller as kind of the overseer of all the accounting. Now, in a really small business, you might not be able to hire multiple accountants because it's a lot of overhead, right? If it's a small business, you don't necessarily have the budget for it. But there is the concept of a fractional controller. So maybe you've got somebody who's in-house doing kind of the data entry piece of the accounting for your company, but you need someone who comes in at a high level and can look at everything and give you, as the business owner, important information to help you make important decisions that are critical for running your business. So the role of a fractional controller would be something like this. Maybe they do help put the books together. Maybe you have somebody else who puts it together, but they're going to go look at your financials for your company and see, is everything categorized in the right way? Why is this important? Think about this. Every check that you write in your business is not actually an expense. And if you don't have a real strong accounting background, like educational accounting background, a lot of times business owners don't realize this, right? So you need that controller there to help make sure that everything is put in the correct place so that you get reliable information out of your financials. Now, once you've got those financials, you can start pulling apart different information from your financials, and you can create things like key performance indicators or KPIs. Now, not every KPI has to be related to accounting, but there are a lot that you can get just from your financials alone. I think one of the pretty basic ones that a lot of businesses should have is a budget, and then your controller would come in and say, here is our budget variance, right? Budget variance is when we take the budget and we see what those numbers are supposed to be, and then we see what the actual numbers are, and the difference is the variance, right? So that's one really great piece of analytics that you can get from a controller or even a fractional controller. Some other pretty good ones that you might want to see: operating cash flow, right? Is the business that I'm in and my prices and everything that's happening, am I generating enough cash flow to operate my company, right? And a fractional controller can really help you get a handle on things like that. Accounts receivable. If you are somebody who creates invoices or your business creates invoices, you need to know how much of those invoices are paid, how many have gone unpaid. That's something that a fractional controller can really help you manage and make sure it doesn't get out of hand. So KPIs, a great thing for a controller to help you with. Now, once we have that information, what do we do with it? It's important on its own, but you want to make sure that you can take that information and that the controller that you're talking to can't only produce it, but can interpret it for you. And the reason that's important is to make good decisions for your business. Things sometimes feel a certain way when you're working in your business, right? Oh, it felt like it was a good month, or sales felt high. But if you're not looking at the real KPIs, you can't run a business on feelings. You have to run it on data if you want to be successful. And most important there is going to be making sure that the finances are based in reality and not just like based on how it makes you feel, because facts don't care about your feelings, especially in accounting. So some really great reasons to get a controller in if you're not at the level where you can hire someone. And just an FYI, if you want like an experienced controller, they're probably making $100,000, $150,000, depending on where you are, what industry you're in, how big your company is. But fractional controller, it's a great alternative for a fraction of the price. You don't need to hire that whole person. You can have someone like my team come in and step into that role and really help you start to get a handle on your business and grow it. So I hope that helps break down the impact that fractional controllers can have on your business. And hopefully, if you have any questions, drop a comment and reach out to our firm if you think this is something that might be helpful for you and your company. We'll see you next time.
Thank you for sticking around. I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy. Bye.